Alrighty, just said we're going live. Let some people jump in the stream real quick. Alright, it's connecting. There we go. How is everybody doing today? We're gonna go live here with Dario. He's a very, very intelligent person when it comes to the market. I'm very excited to learn here today. We're gonna get into quite a bit of stuff. How are you doing today, Dario?
Thanks a lot for the invite, and doing very well. Currently in Milan, it's a very rainy, very rainy night. Quite cold for the period, but it's good to spend time traveling a bit around and still working, but following like markets and things. I'm very happy to be here for a bit with you and to go over some interesting topic like nowadays for people.
Thank you. So, first thing I want to get started with here is I believe nobody knows better than you than this Nvidia stuff going on here. I've been talking about it for a while, but one of the reasons why I bring it up so much is because I feel like these hedge funds and all these banks and all these people, they're getting desperate to the point where they're all running to the same hill. They all need that hill to be successful because they all need collateral. But the problem for them is it's all the same collateral, and as you're pointing out, it's on a hill full of fool's gold because Nvidia is doing all those things that they're doing. Do you want to go ahead and talk to us about the Nvidia Ponzi scheme going on?
Yeah, sure. I've been like, first of all, nothing to add on my side. It's not that I'm making conjecture or assumption or anything. Everything I wrote so far since a long time, and that's actually my approach on things. As I always put the sources and the financial statements, screenshot, and everything, the documentation that is out there about what's going on. Okay, so like when I read in particular the latest 10Q of Nvidia, I was quite almost shocked to a certain extent because some interesting things started to pop up in that 10Q eventually, right? So,
Yeah.
like for example, like we have this company that tells you explicitly then that they sell 10% of the revenues to one person, to one client, then that as a business resell them right away. So is that a client, is that a distributor? Like what does what that's a bit weird. Another thing is that till the previous quarter, they reported revenues in Singapore. Okay, if you go to the previous 10Q, you see Singapore as a region, and everyone was talking about that. Newspaper, they make up all kind of stories. Actually, quite fascinating. If you check the latest 10Q, Singapore disappeared, and instead of that table with a number that has been there for quite a bit, what you got is a disclaimer that says most of the revenues accounted for that region. They are instead shipped to Taiwan and US. And this is the weird thing. I mean, the chips, the GPUs are produced in Taiwan, and you say you ship them back to Taiwan. So, and then out of curiosity, because I'm curious, and then I go to check the Singapore entity. And they come up, yes, it's registered in Singapore, legally speaking, fair enough. Problem is, the headquarter, all the employee and everybody is in Hong Kong. If you go check the Singapore entity attached to Nvidia Singapore office, is another one, is a different one. And then you check the custom logs. I went through some specialized website that connect data, and the latest shipment cleared from Singapore from that entity into US was more than 2 years ago. So all these things I'm talking about, like, it's out there. It's not that I'm inventing anything or private investigator or sort. So these are the latest stuff. There are plenty of those. But what it came up, you know, during like many months, and honestly, it was painful because at the very beginning, like, you know, like the amount of insults I got for free. If I got $1 for all of them, I could like buy like a nice car by now just with the spare cash. And the thing is that when you read the financial, okay, when you read the disclosure and you start putting the pieces of the puzzle all together, effectively what's going on there, and now, I wasn't, I wasn't alone on this one. There are like a few others that have been on top of this, and we have been persistent despite like this stock like massively going up and so on. So effectively, like what's happening here is a scheme where if you picture in your head $100, okay, $100 of cash, okay, I'm company A, and there is company B, okay. Company A takes this $100 of cash and basically buys services from company B, okay. But then so you have $100 moving from point A to point B. Then this company, okay, buys with those very same $100 of goods from company A. Okay, so you still have $100 going back and forth, but from an accounting perspective, okay, you generated revenues effectively on both sides. Okay, so and of course, like you might say, but of course you generate revenues, but then it will come at cost. So that balance actually is not like that. There is a trick that is being used here. So company A gives company B $100. Company B uses those $100, okay, to pay for the upfront to company A for a much larger order. Okay, so let's say for $1,000. So then they go to banks and they say, "Oh, I need to buy these goods. I don't have the money. Okay, can you lend me the money?" And it's like, "Well, sorry, but you don't have much business. You are an empty box, but you take the goods as collateral." And then you tell the bank asks, "Okay, what are the goods?" It's like GPUs worth 50,000 a piece, and the bank is like, wow, sure, and I take a bunch of GPUs and I lend you this money. Okay, so but what's the issue now is that this loan needs to be repaid. So the very first company that get the payment signs a long-term agreement with company B that will bring them revenues, okay, in the future. So they will have a cash stream. So I hope I didn't oversimplify it too much.
No, they're basically lending it to another person to buy their own product, so they're pretty much lending it to themselves to buy their own things to create demand.
This is what's happening. Of course, it's not, is way more complex because this is been done with clients / suppliers. This has been done with investment firms and private equity that support potential startup. This effectively has been done directly through venture investments. But there is one part of this whole story that, like, I always, it's quite puzzling. And it's actually not about Nvidia, but and I connected this many times, but something that no one so far asked is like what Microsoft is doing, because Nvidia cannot do this alone. Okay, now it's surfacing that one single client that bought 20% of the revenues is Microsoft. Okay, so and Microsoft. So this is the first element that is quite intriguing. I'm like, you are such a huge customer and you don't get a discount. I mean, that's a basic commercial rule. How does it work? Like this kind of thing. Like, how can a company make almost 80% margin on a product when 20% of this is sold to a single customer? Like, that customer will ask you like for a massive discount because they know.
Massive discount.
Sorry?
No, yeah, you're right. They would ask for a massive discount. That doesn't make any sense at all.
Yeah. Like, I mean, everyone that runs a business, even basic ones, is like that. And then the second element that quite impressive is that you have all these announcements of investments. Okay, fine. OpenAI, we invested 10 billion. Boom, wow, 10 billion make headlines. Good. Then, when no one is looking, it comes up that out of those 10 billion, 9 billions were credits for use of Azure servers that they're building with the GPUs they buy from Nvidia. And like, so, hello, can you hear me?
Yeah, I'm sorry. My thing just disconnected. I lagged out there. I apologize.
No, it's okay. So, and then you're like, hold on a second, what's going on here? It's like, so you buy, what's happening? So you buy a huge startup, and then in reality, the cash that you put is much little, and you put credit for future revenues on something that you're building, and then you put an order for those GPUs, and then out of that, you start replicating the exact very same transaction with everyone. Those GPUs, by the way, they are orders. They are not like purchased because they have to be delivered. But there is a pretty incredible thing into this line of businesses that actually I confirmed with several people working in the industry, is that these purchase orders, more often than not, is mostly like at the discretion, let's say at the discretion and the good use of the company. But more often than not, like this purchase order, they can effectively be booked as revenue before the order is being delivered, and in some cases before it's fully paid. So, and then if you connect the two things here, you see the revenues increasing a lot, but the cash flows are not increasing as much. And then there is another thing. If you look at the supplier, like TSMC, Micron, and so on, their revenues didn't go up that much. I mean, you have, and this I conclude, so you have a company that sells 20% of all its goods to a single customer that doesn't ask for a discount. This very same company, okay, is involved in investing like side to side in like various businesses that use they're going to use the very same product of that customer. In the latest 10Q, Nvidia themselves bought credit for use of servers that basically like they build with their own things. And then you have the real producer of these GPUs in Taiwan that basically won and doesn't increase the prices for years. Like, and you have an 80% margin. Like, come on. Like, this is simply like not possible. And as a matter of fact, with all these elements that are slowly coming up to the surface, it's pretty obvious what's going on here. Now the real question is, what is the extent of it? Like, and at the moment, with what is available from public sources, is impossible to quantify. But just to give you an idea, like only what is being estimated as annual revenue last year from this, let's call it Singapore entity, it's been around 10 billion on that. And then the thing that really puzzles me a lot incredibly is the revenues that they book on Taiwan. Like people say wrongly, oh, but those revenues is then for GPUs that are shipped into US or somewhere else. I'm like, no, it doesn't work like that. Like you book the revenues based on the client geography, not from the port where you sail or you ship the goods. And you cannot like keep all those like GPU there. So clearly there are still like a lot of things that needs to come up to surface and whatever. But frankly speaking, with all the investigations going on, like I hope they will have the decency and the favor at least like to to dig properly, because the issue in this kind of situations is that we saw it with Madoff, for example. They actually went to check. The SEC went into their offices, and they didn't bother to find anything because it was such a high profile guy. I mean, this is a very serious situation. And then, no matter what, things of this type, they cannot last by definition, because they will ultimately end up imploding under their own, all the weight of all their lies. So this is what I want to say. If you want to ask me anything else, or we want to
No, yeah, I mean that's very much what I was gonna say. Is with all this lying, eventually, do you see a bubble in the AI with Nvidia, and do you see that collapsing? Or since they're all relying on that, and they're all bribing this regulator and that, do you see the regulators again, like you kind of went into, looking the other way, or do you see that being a bubble that will pop?
I mean, like right now, I'm building an AI company. Okay, but AI is a word that is misused a lot. Like what we're building, like at Synapse, is a machine learning based model in order to, for the purpose of doing better work at credit analysis. Okay, I cannot share that much at the moment,
No,
but
okay.
in general, like AI is it's not like a new concept. Like internet wasn't new in 2000. Simply the technology now enabled it. But I tell you one thing, like you don't need all that computing power that they're claiming. So if you think about that, who really profited from the internet revolution? Like the software companies, the internet companies, or the companies that produce microchips, right?
Hmm.
At that time, it taught like Intel and IBM. I was young, but I remember well because I started to follow markets when I was 12.
Yeah, HP. Yeah.
Yeah, they were like, oh my God, like they will like get zillion of revenues. And then, no, because they overproduce, they overestimate. And ultimately, you don't really need that computing energy. And this is actually, that even Mike Green flagged many times. He said, like, there is, right now, there is so much overcapacity being built. And you don't need all that power. Like, for example, ChatGPT 4 that is put out now as, oh my God, like, that thing, they finished training it like a couple of years back with the infrastructure of couple of years back. I mean, so, all this kind of stuff, it's it's always the same story. But what is kind of like worrying me is that they allowed it to grow to this kind of size. Because Cisco was not that big. Enron was a 70 billion company, whatever. Nvidia is a 3.3 trillion dollar value company.
Yeah, it's like
I
the
mean, that's
size of some stock exchanges.
yeah. So honestly,
No, but I agree
people
because, like
worry.
you were saying, though, because if you don't need that much computing power, eventually they're gonna end up returning some of these, these chips. The demand's gonna go down, and then on top of that, a lot of these guys, like you were saying, with these loans, are using those chips backed as collateral, and then that's gonna go down too. So I mean, I feel like there could be a pretty bad bubble coming from that AI eventually. Like you said, they're just letting it grow and grow and grow.
Man, it's gonna be. My view is very simple. It's gonna be like the internet bubble. Like at the beginning, like what people thought that they were the company that were gonna make a lot of money, they didn't, and in reality, their products became effectively commodities. While the ones that ended up like being successful were the ones that they thought wouldn't make it, and they were like selling like hot air, right? Because it's very difficult to envision something that is not already there, and in particular something that you cannot really touch with hand, or something that you cannot. There is not really a way to evaluate like at that moment. But a company that produces chips and produce computer for a while before, and then like produce the goods, that's very straightforward. You can attach a value to that, and then people they make their oldest their sort of dream. But my view is that the AI revolution, the blockchain revolution, is all combined because the computing power now is enabling this kind of thing. But the estimates that they're giving in order of the grow, and as if like we're gonna eat cheap GPUs one day, is like it's not possible. Furthermore, like no one is gonna compete with them. Like so, even like Peter Thiel said, like right now, all of the revenues that are attached to AI in the space, like something like 84% is Nvidia. But Nvidia is not really AI. Nvidia is like GPUs. They're not really developing, they're not like developing the softwares, and so on, right? They
And
are
that's how they get
part of
away
the
from it being
infrastructure.
a monopoly, correct? Because shouldn't that be a monopoly if it's that heavily in that
Yeah,
section?
yeah, exactly. So, and people think they can remain a monopoly. I mean, there are like Huawei in China, AMD that is developing their own things, like other chip companies, and then for sure there will be a more up and coming companies. And let's not forget that GPUs they were designed for video games. They were not designed for artificial intelligence. The reason why they're being repurposed is because of this paper from 2012, where basically some researchers realized that because they could run several calculations in parallel, GPUs were better at training model faster. Okay, but once you train a model, then running a model doesn't require that amount of computing power. Furthermore, the GPUs are very like energy inefficient. They consume a lot of energy by the way they're like constructed. Okay,
Mm.
so running like a huge ecosystem with GPUs is gonna. I mean, the cost of running that. How can you keep like the access to those servers and whatever like affordable for companies to develop? Like so,
No, I agree.
I mean, all in all, like all these things, I mean, it's in the financial, it's there. Like you read a company on this kind of like with this kind of like things in place, you should ask yourself some questions. You see some events, you should ask yourself some questions. You see, like, eventually, even if you don't believe all this, you see the market behavior. 3.3 trillion people says, oh, it's gone up to 10 trillion. I'm like, are you kidding me? Like, are they not gonna have competitor? Are they gonna like sell infinite stuff? Like, it's just this is actually quite worrying me quite a bit to a certain extent, and let's see how it's gonna develop.
No, yeah, I mean it's gonna be like you said, very scary. Because on top of that, I mean, you got CoreWeave, who is one of their biggest people. They're getting investigated left and right with all the stuff they got going on. They had, and and their CEO is an ex Enron worker who had access to cook the books and actually did. So yeah, like I said, it's gonna be interesting to see what happens over there.
Yeah, I
Um,
mean that's amazing. Like I wrote an article on that magnetar thing or whatever. Like these people are not there for the technology. They're there because there is money to be made. That's what people should be really careful about. They're
exactly.
not, none of those lead people there is really a tech person. They're like finance guy and sales guys.
Yeah,
So
no, exactly. I know exactly what you're talking about. I used to be a software programmer, and we had our sales team and stuff. Like, I know exactly what you're talking about. They didn't know shit about the product or how to create anything. So, um,
yeah,
next thing I did want to get into here, though, is going to be so. Just this is just in America here for the commercial real estate. Just in America, you got 929 billion that is set to mature this year. You're already seeing buildings taking 70, 80%, 50, 60% discounts. Even if the right now what they're doing is synthetic risk transfers, trying to offload some of this risk that's coming. They don't they're By doing all that, it kind of shows that they know that they're going to take these giant losses. The Feds, last time you had the mortgage-backed security crisis, jumped in and they ended up buying 2.7 trillion. But right now, they're actually currently selling and showing they're not going to come to the rescue this time. Again, I don't believe the Feds can afford to. What do you see happening from the commercial real estate? Because the one thing I talked about when it comes to a market crash is it's a lot, when it comes to these commercial real estate and these loans, it's a lot different than what they can do in the market because you can't sell, a building. There's a physical building, there's title changes. You can't do what you can do in the market. So what are your thoughts on the commercial real estate, and could that be a bubble that could crash the United States?
yeah, this is a very good topic, and actually it's one that I've been on since a long time. So yes, there is, first of all, one thing that is important to understand is that the difference between like residential real estate and commercial real estate, right? So of course, like everyone knows the difference, but what I mean from a very like inner financial and banking and structuring perspective is that in a way or another, like residential real estate as a market. Okay. So at the right price, you can move the assets. Furthermore, a lot of those residential real estate, they are guaranteed by federal institution and so on. You know, so they're actually like on paper decent assets. Okay, even if the market is very crap, and they did all sort of things again on the front, although not as crazy as before. Even if there have been some funds that bought like entire neighborhood and things because for whatever reason they ran their own Excel spreadsheet and they thought that they could be like a giant Airbnb and make like 8% IRR forever when the rates were at zero during COVID, and then now they figure out that they are choking, and then they blocked like all the withdrawal from their fund. Right? There is a things like beer rate and so on. So commercial real estate is a very particular animal as an asset. Okay, so commercial real estate, you know, cannot be like government guaranteed as an asset. Okay, so it's a pure credit asset, right?
Yeah.
Furthermore, every single building out there, okay, is every single transaction is built on the purpose that the owner of the assets is gonna completely rent it out to repay the bank. While in the residential real estate, you have the owner living inside the house and having his own salary that produces by himself doing another job. and repays the bank. So this is something incredibly important to understand, because the more this building like stay empty, the more like their value commercially, like speaking, like, and also from a loan perspective, it starts to decrease. Right? And then all these like loans, different from residential real estate, they are not very long duration one. They actually tend to be refinanced, like on average, like between like 5 and 10 years or so. Okay. So at the current rates, refinancing like those loans at the current rates, I mean, they are empty. They're already like behind payments. There are so many banks out there that all what they're doing, they simply come to an agreements with their client to effectively like interrupt the payment on the loan and put everything at the very end, and they have like a 36 months grace period in which they can restructure the activity and then resume the payment with all the back interest, and nothing happened to the loans in the book. In appearance, it remains healthy. The problem is that on the other side, and this happened like recently with some liquidator, like the bank of this deal, the owner of the building went bust, but the liquidator said, "I'm sorry, no, like, we're gonna like sell this, and then you're gonna get your losses." So, and the issue of commercial like real estate is another one, is that effectively, like, the way I say it is like COVID, made people realize that you don't need to go necessarily to the office. Okay. That is one of those tectonic shifts in the economy that happens once in like few generations. Okay. For example, like, the way that, in the past, like we were using like the old telegram, and now we use email, right? Something they simply like become part of like museums, right? So all those commercial buildings out there, they need to be filled like 70 or more into given, and then the profit is above that, okay, for the owners. So they are like 20, 30, in best case scenario, like 50% filled, rented out. So because people are not going back to the office, simply changed. And that's not, it's in Europe, like I'm here at home, okay? I can see from my window, there is an old building that was owned by Unicredit before, okay? It's like 12, it has been transferred to Italian REIT. Is completely empty. There is a huge sign on top of it. It's like for rent. It's all completely empty. And before it was hosting like 5,000 people. Okay. You go in London, you see the same. You go in Asia, you see that all over the place. Simply like these things are not going to coming back. So, you can buy the loan. As a matter of fact, like the loan is an asset that can live on its own potentially if there is demand for it. Okay. But always people need to remember that there is difference between the price you pay and the value that you get. I can give you can pay something 100, but ended up being completely worthless. Right. And in this case, like these buildings, frankly speaking, they're never going to get like filled, and furthermore they're even deteriorating, so they have maintenance costs and things like that. So, and here is the last thing I want to touch, is that these loans are effectively linked to the assets themselves. So more often than not, the owner of that building that has the loan attached to that can even decide to walk away and give the building back to the bank, and they cannot do anything about it because they're non-recourse, meaning like the bank is stuck with that building, okay, and they cannot go after the owner that maybe continue operating in other areas where there is still commercial demand for its space. So from a bank perspective, effectively, like already right now, and I've wrote this last, several times. I ran some calculation in one of my latest articles, although I always simplify things to make it like easier to understand. But if you think about that and what I said about price and value, yeah, they can put the price you want. I mean, if banks starts exchanging like assets between each other, yeah, oh, the mark to market is 100 because I sold to him and then he sold me back. But there is an issue is that if no one is servicing those loans, there is no cash inside. And this is the ultimate thing that ends up really hitting banks where it hurts. Banks don't go bust because of solvency issues. Banks go bust because of liquidity issue. Potentially, a bank can secretly stay insolvent for a long time and even came up from the grave as long as it's liquidity. But if it stops having liquidity, so if this cash flow don't come back and they don't start matching their outflows, that's where the problem starts. What the Fed do about this? I mean, this is in the sense that they can't simply buy out these loans because like what happens, like it's them, and then who takes the losses? Like it's not that they can like simply like magically make it them disappear, because from an economical perspective, even in fiat money, people think money can be printed out of thin air without consequences. In reality, there are always consequences, and consequences come back with steep devaluations of the currencies when people realize that you inject money back into the system to fill a hole for the sake of filling it. Because filling the holes of a bank that lost a gazillion ton of money on commercial real estate is not going to make the economy grow at all. Right?
No, it's gonna kill us. It's gonna hurt us a lot. You're gonna
Yeah.
continuously add inflation, and that's the thing too. Like you were saying with these buildings filling, it's like another reason other than just with COVID, you got the 1% now has more money than the 99% in the United States. So it's not like anybody has money to go spend at these shops and these buildings. Those shops are going under, and it's not like anybody else has money to open up brand new shops because they're all too broke to go get a loan to start a new business. And who wants to take that risk to start a new business in this kind of an economy?
Like we started a small business with my brother, and now 6 years ago, very very old fashioned business. Like my brother had this idea to sell like this widget, like to do a specific cut for the ground. And right now, like in many regions, it's impossible like to get a loan for SMEs and exactly as you described, for people that really can contribute to the economy and make them grow, because all these lenders, they are stuck, because if they don't get the principal back from all these assets underwater, they cannot loan out. I'm keeping things very simple. Let me put the disclaimer here. Is of course is way more complex than this, but as a matter of fact, there is only one way to fix this: is you need to put back capital into them. That means you need to wipe out the shareholders, and then they take the pain for the mistake of the management. But then, again, if the country needs to put capital, but then is running a deficit, and that will increase the deficit, and then the central bank needs to print more money, the ultimate result is as if like the Fed ends up buying it and monetizing. So it's simply like continuous dilution of the fiat currencies and spreading to the masses the losses, while the profits, they kept being privatized. And the ultimate result is what you described, that the top 1% becomes richer and richer, and the bottom one poorer and poorer.
Basically, it gets indebted through slavery, in my eyes, to the 1%, is what it feels like.
Yeah, I mean, I wouldn't say, I'm not sure I would use the words
well, yeah, not that, but you know what I mean.
Slavery, but I mean, yeah, I mean, it's very unfair. honestly.
I
It's
only say that because there was a quote by one of our former presidents, and he said there's two ways to conquer and control a nation. One is by the sword, and the other is through debt. You enslave them through debt.
yeah, that's I didn't hear, I didn't know about this quote, but yeah, that's actually like fairly correct. So yeah.
And then,
And
yeah,
honestly, like ultimately, the only way to stop this vicious circle is like for people like, you know, you need to clear this mess. You need to take the pain. That's it. And at some point, we will have to take the pain because in one way or another, all these like great economic imbalances they don't end very well because people ultimately get tired, right? Because
oh
if you
yeah,
work hard, you get a paycheck and thing, and then at the end of the month, you have nothing like left in your pocket in your savings account, or as is happening right now. So many people are like using consumer loans to pay for their supermarket bill. I mean, that's very wrong. And people should be able to, people that are working, that are honest and paying taxes, they should be able to afford their food. So that's very basic. So
yeah. It should
if
be
this is
basic
not
economy right
happening,
there.
yeah, exactly.
The next thing, yeah, I mean, you did go into a lot of the stuff I wanted to get into at the end there. We could just skip to that since you kind of talked about it. But like, so in the United States, after everything we've gone into, with as we're going over the financial system, they continue to steal, print. Inflation. Is there at any point do you believe that the system financially has to break, or will they always be able to print enough, or eventually wouldn't inflation eventually crush your middle class and your lower class out to where they're going to ask too many questions? Like, there's got to be a point. Do you believe that they can only grow the debt so high or print so much, or what is your thoughts on that? Because they're already above GPU. The deficit's growing and growing, or GDP, and the deficit's growing and growing and growing by the quarter.
So actually, this is something I have been, thinking a lot about, like trying to, you know, look for if there were like previous academic theories and stuff like that and so on. Um, the truth is, in reality, like there is something that has never been really considered that much before. Maybe because people didn't think it could happen like realistically. But right now, if you think about that, let's take a step back. You have central banks that are supposed to be the bank's bank, right? In theory, the lender of last resort, the one that comes, when a bank is solvent but they need liquidity, not when a bank is insolvent and they need to try to have relief out of this. Okay, but that's another topic. Okay, central banks right now, like the Fed, the ECB, the Swiss National Bank, potentially even the BOJ, if you apply current mark to market, but the ECB and the Swiss National Bank, those numbers are out there. The Fed is using a trick basically to booking a credit towards the Congress, but they are running for with negative capital. Okay, so and if you think about this mathematically, okay, what is leverage? Leverage is simply like numerator and the denominator. The numerator you have debt, and the denominator you have equity, right?
Hmm.
So, on a central bank perspective, you know, let's put at the numerator the money they print, and the denominator, in theory, all the assets, the economy, and the value to back that amount of fiat currency in circulation, right? Reserves, gold, you know, taxation, revenues, and so on, right? So there is an inherent leverage in the system if you start to print too much money, right? The currency devaluates, but the dollar has a very favorable position because all the other economies are worse, right? They're actually printing even more based on the size of their own economy. So US dollar is the best among the worst in the fiat world. But what happens here is that, as I said, the consequence they always like surface. In this case, is surfacing towards the population that doesn't see the dollar devaluating against other currency, like you can see for the JPY, for the Turkish lira. If you look historically at the British pound from beginning of the century till now, it's like trash mastery compared to the dollar. So there is not much out there really strengthening right now, against the dollar. So how is this devaluation happening? This devaluation happening in the.
Do you think BRICS is not a concern in any way then? Just curious.
Sorry, what?
Do you feel BRICS is not a concern to the dollar at all?
Sorry, I didn't get the word.
The BRICS?
Oh, the BRICS. No, like they're all devaluating. Like what I wanted to say here is that maybe we can touch that topic later. But in the current system, the dollar is still very strong. Okay, because it's the infrastructure. So now, how is the devaluation happening? Where do you see that? You see that in the loss of purchasing power. And how do you lose purchasing power? Like, there is one thing in finance. People like to make things very complicated, like, derivatives, charts, whatever, all these things. But in reality, financial world is very simple. Okay? You use basic algebra all the time. If you use like a lot of algebra together, it doesn't become complicated. So people like to put this formula, but at the very core is simple. So if I have a widget in my hand, okay, and this person has $10 in his pocket, I want to sell this widget for $10. If another person comes with a bag of cash and handles this cash to this person, so this person now has $1,000 in his pocket, like magically, I'm the one with the widget they want to have. What's going to be the price I'm willing to sell the widget? So again, simplifying this, but you see this transfer of running deficits, monetizing deficits in a way or another without direct, economic benefit is really, really damaging. And when is the breaking point? So, in my opinion, in some perspective, the line of no return has been crossed already in the moment that you have effectively central banks have started to print liquidity and at the same time increase rates. Okay, so they were doing QE infinity, and then they started like increasing rates. So effectively, like they were losing money themselves. Like that's a conundrum, right? And they're running like negative equity.
I got it pulled up right here. It's negative right now. The Feds are running at negative 180 billion.
Yeah, I mean, what do you like? If you, I don't know, if we're talking right now, me and you, and I know you have zero in your bank account, you have zero assets and zero whatever, and then you take a piece of paper and you write 100 on it, and you say, "This is worth 100, no worries," because I grant you that. I'm like, okay, man, if a friend, I'm sorry, but it's not worth 100. I'm not going to sell you whatever you want to buy from me. This is exactly the situation right now. So people think that central banks in countries, they can keep monetizing their deficits over and over again forever. But in reality, we're very close to the point that people think, oh, they will resume QE, they will like decrease rates or whatever. But can they? And who's going to get that money? And then to this point, you come to the BRICS and countries that have reserves and that have like, they're not running a deficit, they are running actually, they have like positive, economic balance. And then they have like, they keep accumulating reserve and they keep accumulating dollar. So here they're trying to inflate their debt away. But if you are the person on the other side, like, and this is another thing that people always miss in finance or in whatever, you always have two sides of the trade. When you buy, there is someone selling. Okay. When you purchase, you enter in a transaction, there is the counterpart. So if the US is selling debt and printing money, someone needs to buy that, right? If not the Fed that is buying that, who's buying that? Okay, his own banks, his own citizens, and then foreign people. But then even your own citizens, like if I'm holding something that it keeps losing value so fast, and honestly, like, now we have rates of 5%, and you say, oh, the inflation is like 2 point something. All right. Well, you can say whatever you want, but you're paying interest, okay? So let's imagine an hypothetical case. My cost of life is 50,000 per year. I have $1 million savings, okay? I put $1 million at 5%. It gives me like 50,000 per year, okay? So if inflation is 2%, okay, my cost of life, okay, the following year is gonna be $51,000, okay? If rates remain the same, okay, and I cannot reinvest that money. Why I cannot reinvest? Because I need to pay my cost of life. When I'm gonna get that extra 1,000, you know? So
Yeah.
currently, people see the effect of inflation because if you check the savings rate, they're collapsing. They keep telling about, oh, so much liquidity on the sideline, so much liquidity on the sideline. But, and here I stop. In statistic, if you have a person with 9 chicken and 9 people with 1 chicken, the statistician will tell you, everyone has a chicken. The economy is fine. No. If a person has 9 chickens and 9 people have 1 chicken, they cannot feed themselves with 1 chicken. Okay? So perhaps they go to the person with 9 chicken and they offer something to get more food for themselves. But if they run of extra to convince that other person to sell them one of those chicken, what do you think, like, hungry people, they want to eat do? They start to get angry, right? So how far are we from there? To be honest, I don't know. But frankly speaking, in particular, like going around in Europe and, the US a while ago, and now I know, like, from the ground that things are even worse. Like, the level of poverty in, like, developed country, it should be like raising alarms left and right. But for whatever reason, people are not talking about that. So
That's because the media is paid not to by the people that control and are causing that poverty.
yeah, yeah,
And then,
that's correct.
that I mean, that leads into another one of my questions. Kind of, I mean, you pretty much went into it, but like, so, you know, with everything going on, the rates are going to keep going up. The rates have to keep going up on Treasury because, as you were explaining, the value's going down, and the demand actually dropped about 11.5% over for Treasury demands. So they're gonna end up needing to do is get people inside their own country to start buying it. But the problem is we're already broke. So they're going to need to do the 1% or get more people to leave the banking system and go into money market funds. And the only way they're going to be able to do that, like you said, is keep paying that interest rate. And you have another 7.6 trillion due maturing at the end of this year. And they're going to have to go up to the new rate. And when that happens, the interest rate will now go up to $1.6 trillion for the United States. And it will now be their number one expense. So, like you
I
said,
mean, you know what?
eventually,
What will be very funny for me? Like, people were giving, sorry, apologies for the word. They were giving a lot of shit to Italy in 2010 because, oh my God, the debt to GDP is getting so high. Italy is going to bankrupt. At the moment, US debt to GDP is about to be higher than Italy. you
yeah,
know,
and they don't care. They're just hiding it, and like that's what's crazy. It's like I said, they control so much. In America, you start to find out like there's like a banking mafia that controls everything, and to that point, one of the things that just came out. So the last election, there was $1 billion donated in dark money. Over the last 3 elections, dark money has been on the winning side of the election. Now, a report came out a couple days or a month ago that dark money donations for 2024 are already outpacing the prior election. So there's going to be over 1 billion donated in dark money. How can and then on top of that, that new law just got passed by the Supreme Court. Now, the Supreme Court said that pretty much. So what happened is a mayor ended up getting paid $13,000. He ended up giving out a contract from a contracting company. He awarded the contracting company the deed, and it was for 1.1 million. After that, they gave him $13,000 for consulting fee. The Supreme Court ruled that as long as the payment happens after the fact, not before the fact, because then it's a bribe. But if it's after the fact, it can be considered a gift. Well, if they can do that insider trade and then get that dark money, how is America ever supposed to get it back or like control it?
I make you laugh for a bit, and everyone is that is even make you laugh. Like where the first time I saw this news, and I actually laughed about that because I didn't believe it. It was on the Daily Show because actually I watch it. I really enjoy it because it's. I was like, no, this cannot be possible. Like, I mean, really? And then I go to check. I'm like, shit, it's real. It's not a joke. It's not like Jon Stewart making a joke about this. So because sometimes you never know comedian, and yeah, man, I don't know what's going on there. Like sometimes I don't want to enter into these topics because frankly, like politics is a minefield, and I already have my deals of I've in fight with finance thing, and I enjoy doing that. And honestly, make it clear to everyone, like it's not that
No,
there are
I
no
hate talking about
good
politics.
or
Trust me, I
bad.
don't blame you.
Yeah. No, but my point is that I just talk about things as they are. No, when I find good things, I write about good things. If I find bad things, I write about bad things. Like right now, like honestly, finding things that are good in a good state of doing well is really difficult. And from an honest perspective, like if you look at things objectively, if you believe it, whatever they tell you, of course, we're going to, everything is gonna be fine. No landing in the economy, nothing to worry about politics, and so on and so forth. But it's really like seeing things from far, in particular on that corner in the area of your country. Like it's sometimes it's hard to getting in your brains like how this thing is possible. I mean, everywhere else
It's
it would be
crazy. Like they're
yeah.
stealing billions and no one gives a fuck. Like it's crazy. You look at the banks. The banks have paid like hundreds of billions of dollars in fines, and that should be every single front page every day. Hey, these guys are stealing billions of dollars and no one cares. So that leads into my next question here. The Supreme. I only got two more here for you. And then if you want to go over everything else, we can. But I know it's late for you. I only got two more here. So the last one I wanted to get into is the SEC. I'm sorry, the Supreme Court limits the SEC power, and they basically went ahead and said, if you're going to go ahead and penalize people for fraud, they now have the right to a trial. And I think that's a massive step for us. And because these regulators, the problem is you just saw another article that they added 4 new bank members to the DTCC. So these guys are pretty much policing themselves. And do you think that the way to do these trials is the only way to really fix this? Because I don't know. Do you know what an acceptance waiver and consent is?
No, to be honest, I'm not familiar with that. But one thing that I want to say about this topic is like, from an honest perspective, I know like outside in the world, like outside US, and in Asia, to some respect, when someone commits something bad, it's punished. That's the purpose of punishing, is because you want that person to not do it anymore, and then to discourage everyone else to do it because they didn't get a benefit. Like this approach of handling things, effectively is almost a way to pay the bill. What do I mean? It's like, okay, I know you misbehaved. I come to your door and the guy's like, okay, I misbehaved. How much you want to get away? And it's like, so if you behave like that, the fine it's not anymore a discouragement. It's a cost of running the business, right?
Exactly. But on top of that, you got these. Well, what an acceptance waiver and consent is it's a FINRA. It's a form that makes it so you can, instead of admitting guilt to any crime you do, it keeps you out of the court system, and then you don't say I did the crime. You don't take any accountability, but you pay a small fine, and then the matter's settled. But since it's settled through FINRA, they're not allowed to take it to a federal court. So I feel like at this point, since they pretty much have that acceptance waiver and consent, one of the things that they were talking about with this ruling in the SEC is that it could actually spill into other regulatory bodies like FINRA, like the OCC, and other things like that. If you're committing fraud, you can have a right to a trial. And that, to me, is the only way to actually keep it fair, because unless they start banning people from being, ex-traders or working at these firms and then going into, regulatory bodies or getting a job right after, there's no other way to stop it other than to get a trial in front of your own peers.
One thing that I agree with you, and one thing that I ask myself several times, I really do not know at what point things really change so extremely, because if you remember, Solomon Brothers back in the days almost went bust because a trader, a single guy, decided to corner a specific issuance of the U.S. Treasury market, and he make a couple of millions in profit, maybe. And the regulator went so hard after bank that almost put them out of business, and they had to be rescued. Okay, as a way to discourage everyone else to even think about doing that anymore. Right now, I mean, what makes me incredible is that the money laundering things that is always on the news. Like, how many times it has been done, it's been fine, and then rehappens again and again and again and again. I mean, come on.
Oh, I know.
So
it's crazy. By the sums of the billions of dollars.
So it seems like if you run a system in this way, I'm sorry to say, but fines becomes a cost of doing business. So maybe the little fish inside the bank, there will be a scapegoat and whatever, but go away with that, and everyone was gonna be carry on doing whatever it does. But things in banks, let me maybe be clear. I work in a bank for a very long time. So many friends work in bank. By the way, they're not very happy at all, because inside banks, it's normal people like us, not like people like criminals or whatever and so on. There are some elements that might go over the board, that because they want to make money, like KPI or whatever, and they do things like that because ultimately people are greedy. It's like, okay, maybe I launder like $1 billion for this guy, like I find a way, and they give me like 10 million bonus or whatever, and the bank overall doesn't catch this thing happening. But no, people in banks overall are like normal people. They go to have a job, they have families and whatever. So the problem itself is like the business. It's fines and discourage certain type of behavior, or sometimes is even like a matter of the fine that you get is basically like you need to pick between investing maybe 3 billions in improving your system to catch if a dishonest employee is helping some bad people to launder money, or potentially 1 billion in fine. You're running a business. What are you going to choose? 3 billion or a billion? So again, this is an example. I'm just like something hypothetical, but this actually happens,
Oh yeah, of
because
course. That's what I'm saying. It's like this whole system is fucked up because it's like it makes it to where if you want to commit crime, you're gonna get ahead more than if you just are a law-abiding citizen and do this. Because as long as it's not a deterrent, or you can sign an acceptance waiver and consent, and there's no. I mean, think about this. If somebody went and literally walked in and robbed a bank, he's gonna go to jail for like 30 years. But if you as a company steal billions of dollars, you get a slap on the wrist.
yeah, true. Sorry about that, but I don't know. I'm honestly, you know, I see seeing things from far. Sometimes it's quite hard to understand. Like, you know, as you know, everyone, I live in Hong Kong, and I live in, you know, and I go often like to China, and they had their own problems, and you know, they dealt with them like big time. They still have problems because every country has some problem, but you know, things like this, you know, so open on that in this way, right there, right now, like they realize that it's very detrimental to the society and in particular to the people, because ultimately, you know, if you are a representative of the government, you are effectively like being put there by the people that voted. And effectively, I wouldn't say they are your boss, but you know, you're representing them. So you should be respectful of them. And if these things happen, you're not. So yeah, I don't know. Like we kind of digressed a bit, but it shows you like how a person sees things from far. And they
No,
know
that's
very
what.
well like the financial markets and things. But when it comes to this stuff that in reality are not really financial markets, it's more like administrative system, political system, whatever, and you think like what's going on? Even if we go off this topic, and there was this thing about like the 7 billion for the charging station, the electricity station, and they
Yeah,
built
two
8 of them.
billion.
Yeah, and my question was like, so where did the money go? And no one asks. So what's wrong with that, guys? Like it's pretty obvious. Like all this deficit, you know,
That's
but
what's crazy.
whatever.
They got everybody staring into their phones. Everything's like a. I mean, they literally had that bomb go off on and those gases. Over in Iowa or whatever, and they literally gassed those people. Had a train explosion, and it was something that was like catastrophic. And it's just a cliff note. And that's the thing. These guys still $1 billion. It's just a cliff note. Everybody wants to just click on a topic for 10 seconds and move on, and nobody has an attention span on things that actually matter. It's just like it's crazy how like they have everybody programmed to just accept corrupt things like that should be fucking unexcusable.
Yeah. And you know, to be fair, and you may wonder why an Italian living in Hong Kong is cared so much about the US is because you know you guys out there, you need to realize that whatever you do in your government doesn't whatever impacts the whole world one way to another. So if you want to position yourself and you know try to do business in another area of the world and whatever, yes, it's freaking important. Okay, it's like the mother duck with all the little duck behind. Where it goes, everyone goes, they like it or not, or you can picture that as a magnet. So I don't know, man. Like you know, I love the book Silk Road, and if you read it, like you see how like there's been like this cycle, and in through history, if you match that with the book Sapiens, there have been again like cycles about this. I don't know, like there are like highs and lows in human civilization. I'm a bit worried. Like, unfortunately, we are quite close to lows, so not sure how they're gonna do this. But you know, people now are starting to realize that things are very wrong because it really impacts their life. So
No, and I agree. And like you said, everything that happens in America has a ripple effect everywhere else. The last question, and then I got for you. We'll skip over another things. Maybe do this again another time. But one of the things I oh man, where was it? No, I forgot. Hold on, where is it? It was gonna be. Oh yeah. Okay. So when this thing, it's just not obviously not financial advice. I'm just curious of your thoughts, but if there is a giant meltdown in the United States economy with the commercial real estate or any of these other things, where would you say would be the safest place that you would put money? Money. Would it be gold, crypto? What do you think would be the best hedge for a fiat crash?
O- Okay. So actually, this is a question I get quite often, like personally by friends and whatever. And my answer, okay, don't take it wrongly, but I mean, if there is a meltdown in US, you are not gonna have the problem of money. Every kind of money you have is gonna be worthless. Okay, any asset or whatever is like simply like a different system. So what you want in those kind of extreme scenarios, you know, is assets that you can exchange for something eventually. Okay, so because ultimately, like you cannot go to the supermarket with a gold bar and pay for the bread or whatever. That's not possible, right? But that there is going to be another monetary system or another set of things that will structure stuff in a way, and that good can be exchanged for that new eventual like currency that you will be able to spend in your daily life, whatever it's gonna be. Okay, maybe like it's gonna be CBDC. Who the hell knows, right? Although like I tell you, like central banks are working very hard on CBDC because they do understand that the traceability and the blockchain infrastructure are gonna be really like big upgrade to the current system because right now they print money, they don't know where that money is, so they cannot control it. Right? This is effectively like what they're trying to achieve. There is to control the money, and at least to know where it is in any point in time and whatever, and perhaps it will help to make better decisions. I hope so. Assets that I hold right now, as I disclosed, many times I've been very open. I don't hold any stock. And the reason is that there is really no value there. People can make all their own tweet and stuff, trying to give a sense, try to find a confirmation. This is called confirmation bias and whatever they say. So if you are someone with a long-term view, the stock market is not the place to be. But there are many other asset classes, like gold, for example. You like it or not, through history, kept its value. That's it. That is proven. We went through war. We went through millennia, whatever. Gold has been there. It will remain there. Okay. Even if you cannot go to the supermarket to buy like bread with gold anymore or things like that, but people recognize that as a store of value. Then how that value translate in monetary terms, it depends on the monetary system upon which you measure it. Same for silver. Another thing that I believe that in a general meltdown is going to happen is like commodities in particular. Like I'm long oil, and the reason why I'm long oil is because all this, you know, oil runs the industrial economy overall. People say, "Oh, because of EV, we're not gonna need that much oil." I'm like, so how do you think they put the electricity into the cars? With solar? Of course not. With wind? No. With nuclear? Just count how many like nuclear power stations there are out there. So the price of oil right now is there where it is, not because of the quantity of commodities too much. And if you check, the consumption of oil is increasing and keeps increasing, okay, while the reserves keeps going down. So why the rules of economy are being broken? And say, oh, because US is producing so much now. Well, and that's another thing that is quite amazing. Is like if US is producing that much, why are they importing so much oil? So what's wrong there? And then there is another data that I like particularly is like the production increases, but the number of wheels keeps decreasing, and they're not really building like technological new wheels from the future that can run so efficiently or whatever. Like they're, those are like infrastructure that runs for like decades out there, and they're there for decades. Like I think the last refinery in the US has been built in like the 80s or something. I mean, the infrastructure is not there to be more efficient. Okay, so clearly, like the data are practically faked, and the price is kept so low because, unfortunately, and this is what something that I really hope they will fix in a way or another, the derivative market is all over the place, but the derivative market, by definition, is a derivative. It needs to be based on an underlying. And you can grow it as much as you want, you can balloon it as much as you want, but there's always a breaking point. And oil price, in my opinion, it should be much higher and is kept where it is right now because there is a clear interest from US administration to keep it where it is, to keep inflation under control. But the way that it has been done is not really by increasing production or whatever. In reality, it is by the use of derivative and the weaponization of the oil reserves from US that have been effectively day traded to extremely rock bottom level in a period of time where you guys have aircraft carriers going around the globe, and you better have like a good stock of oil. Like I know that they are nuclear, so in theory they can run around, but all the ships that go along with not nuclear, they need like oil to tag along and be escort for like all these ships, and then all the military companies and whatever, and the reserves are very also oil. Then I invest in real business. So actually, that is something that is very like important. Sometimes people, I don't know why they miss like this part of history. In the Weimar Republic, everyone knows the stories of people like going with the carts of banknotes to buy bread and so on. True, they were becoming super poor. But at the same time, there were also like people that managed to become rich in that environment. And you wonder like, what do you mean rich in marks? No, like really rich, like in foreign currency. And so basically, when you have a real business that is run healthily, okay, and in particular, like this business managers like to have, revenues in a currency that it devaluates like slower than the one that you have your costs, and furthermore, so that these values increase, so the business stays. The monetary system can change, but the business stays effective. There are businesses in Japan that are being run by families for centuries, and they went through up and downs. They went through various wars. They went through the disaster and the World War II. Like they went through economic crisis, on. But businesses are there. That means that real businesses that are run healthily, no matter what, they keep value. And then ultimately, like because as I said, I don't see any point to be in this stock market from a value perspective, from a long-term perspective. But I actually see the point of being in the crypto market for a long-term perspective, because as I said at the very beginning of this live stream, is that what people didn't understand about the dot-com, and they don't understand in general about the revolution, is what's going to be in 10 years, what's going to be in 20 years, and so on. Now people like to say, oh, if you invested in Amazon at the bottom, now you would have put 10,000 and you will get like 20 million nowadays. Yes, how many people, check what people were saying about Amazon at that time. They were trashing the company. I was like, oh my God, it's sell books, whatever. They really didn't understand what Amazon was truly after, and the real value of Amazon that was actually from the server business, not from the books. Or other companies like that, like whatever, like when it comes after like Google, Facebook, and other type of companies that went up, okay, quite a lot. So right now I see this kind of revolution happening in the crypto space. Okay, crypto companies are companies. Okay,
that they have a different structure. Instead of having a structure based on stocks that trade on exchange, they have a structure based on token that runs on blockchain. But there are people that create value, that create tools, and they're not there to waste time. I know there are the meme coins or whatever. There were also like people during the .com, they were just putting like opening a website and calling it like .com, and they were just going up in the stock exchange because of that, while maybe they have nothing to do with .com. Like that's every single cycle they have this sort of things. It's just human nature. Okay, so there are boom and bust cycles that are particularly like made extreme by the very loose monetary policy of the latest year, but that's another story for another day. But in reality, there are people that are building useful stuff, that are building business, that are building infrastructure for the future. And in the same way that internet, for example, revolutionized the financial system, like nowadays, the financial system of the society, nowadays, no one can go out of home without a phone feeling comfortable. People need to be plugged to the internet. The internet has become like part of life, right? It's going to be the same in the future for the blockchain, okay? Of course, not for the people, but in particular for companies and for the financial system. Like the current financial system runs on Swift. That is something so old and outdated. They keep breaking. It's so expensive to run for banks and like for institutions. They tried to replace it several times. They couldn't find anything that could really like provide much of an improvement till the blockchain arrived. And I tell you, there is a gold rush among financial institutional regulators to be the very first one that managed to nail the infrastructure that can become the next Swift, and that's going to run the blockchain. And then there will be applications on top of this. And then there will be potential like, tracking of clearing and whatever. So when people, they need to borrow stocks, it will be there on the blockchain to see, not right now that is on an Excel spreadsheet somewhere or in a ledger somewhere. And you need to have like a monkey reconciling the number, and then spitting it out there, and then this also can be changed. Like, so it's very difficult to visualize this kind of things. And similar for AI, I put out there several times on Twitter the book AI 2041, and I suggest to everyone who's listening, like, read that, because similar to what Julius Verne wrote in the 1800 about submarines and rockets and whatever, that it was all imagination, but then they happened. That book actually is very well written and really gives an idea of what's AI truly be and what's application and impact of human life of AI is going to be in 20-year time. That is why it's called 2041. And in all those things in the book, you don't find really mention of GPUs, infrastructure, whatever, because those effectively becomes commoditized. As I say, competition, develop, whatever, everyone wants a a piece of that, a slice of that cake. Like when you're going to have 80% margin, like people would love to compete against you and give a chunk of those margin, right? But nevertheless, in the same way, CPUs and like internet infrastructure became commodities, as a matter of fact, today. And some of the tools that we were using before, like, some like desktop printers or things like that, they don't exist anymore. Like, or the floppy disk or the CDs don't exist anymore, have been replaced by USB key. There is always like this continuous evolution that you get better technological stuff, that they replace older one and they change the ecosystem a little bit. So blockchain, and with the right AI component, in my opinion, is a winning strategy. But it needs to be real AI. It needs to be value added. When you invest in something that is backed by a business, it needs to generate revenues ultimately. Like all these, like, imagine like ChatGPT. Why I'm quite like, I smile when I think about that. If a product can be copied so fast, like there are now hundreds of copies of LLM model. Yeah, they might not be as good as ChatGPT, although like some are already like pretty much at the same level. But what's the incremental value of monetizing that if the barrier of entry is like rock bottom, right? So that is not the correct one. I would invest myself. I would invest something that really create hold values and can be monetized sustainably because it really helps people in their life directly or indirectly through improving the ecosystem around that.
Thank you. I appreciate that. Yeah, those are basically all the spots I'd be going into as long as you get the right crypto. I'm gonna get going here. I know you have to go. My wife needs me to help her with some stuff here quick too. So, thank you so much for doing this. If you want to do this again sometime, I'd love to get together. Maybe we can host
Sure.
like a space call on Twitter or something. But
Yeah,
thank you so much, my
yeah,
friend. I
it's
appreciate
been a
it all,
pleasure.
and you have a great night.
Cheers. Cheers. Thanks a lot and have a good evening and a good dinner. Bye bye.
Thank you, man. Have a good one.